In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
Hello and welcome to this Thursday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have the lovely Donny Gilbert talking to the brokers. We also have John Kingston back again for an oil update, but first a word from Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. So volumes running right in line with what we saw last year at this point in time. We were running about a 92.31 on the OTVI this time tomorrow and 93.60 today. So a little bit of discrepancy, but we are expecting the volumes to continue to be right in line with last year's levels to this point, because we see no reason to think otherwise effectively. So let's check out what's going on in the United States in terms of capacity changes week over week. So we've got our weighted rejection index pulled up here. Anything in blue is going to be something with a tightening capacity versus the last 7 days. So in these blue markets here, you get a call for a spot rate. You need to keep your rates a little bit higher or just maintain your ground. Stay on your ground in these blue markets here, because that means that you're going to have a value above zero. Most of the values right now are running slightly above zero to about a 5, which means that the market itself is not necessarily going haywire at any given point in the country. The biggest change week over week in the weighted rejection index is going to be the Rock Island market at a 4.6, not a high value. If you've noticed, if you've paid attention, you'll know that I don't really think anything's too significant unless it breaks that 5-point barrier, especially in some of these larger markets who can get over the 5 area. But Rock Island, not necessarily a huge market, about 0.86% of the total outbound volume in the United States right now, so about a mid-sized market. Some of these other markets to note, Detroit continues to show a wide range of volatility as volumes fluctuate wildly, especially after the GM strike comes out. They're really rushing to ramp up production in that area. A lot of automotive parts coming into that area and out of that area as they move between plants. 1.53% of a total market share value, so that is a pretty decent sized market in Detroit. However, it does run quite a bit of a deficit in terms of trucking supply. So looking at some of these other markets out here, Portland, Oregon, really the only blue market in the Northwest, which the Northwest has been one of the stronger sections of the country this winter. Seeing a lot of blues up here, a lot in the Spokane, Pendleton markets, Twin Falls, actually going red this week versus last week. So it's finally starting to settle down, except for parts of the Portland market. So let's look at some of the calmer markets, if you will. So anything that's kind of starting to loosen up over the last 7 days, I should say, is going to be the Stockton market, Minneapolis, Twin Falls, Idaho, Pendleton, just like I mentioned before, and then down here the San Francisco market itself. So Stockton and San Francisco, of course, two of the more backhaul markets in the country. You don't necessarily see a lot of freight coming out of there in relation to the amount of freight going in. So it's not necessarily a huge surprise, but it is getting a lot looser here over the last 7 days. Minneapolis, Minnesota has been a huge market over the last winter, I should say, not necessarily just the last week or so, but it's finally starting to come back down off of its high levels that we saw. So overall, let's dive into the Rock Island market. You can see here, van tender rejection rates are starting to really pick up. A 20.23% van tender rejection rate. Reefer, not really a factor in this market in terms of overall capacity or tightening or loosening. So if you are a carrier operating in the Rock Island area, which is going to be that tight Davenport little section of Iowa and Illinois right there, you're going to have a lot more opportunities on the spot market here over the next few days, especially on the van side, not necessarily on the reefer side. Most length of hauls, except for the local length of hauls, tender rejections are starting to come up. Local length of haul, of course, diminishing here over the last little bit. So that's probably good news for any carriers operating in this market, because that local tender rejection rate, not necessarily a good sign that you're going to continue increased utilization. So Stockton, California, as I said, the market that is softening the most over the last 7 days, falling off a cliff here over the last little bit. It had been operating at a pretty elevated range of tender rejection, at least relative to itself, bouncing up over 10% in the last couple of weeks or so. So that is a pretty significant change in this market overall. So Stockton, stay away from it even more so than normal. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Thank you, Zach, for that wonderful carrier update. Brokers, did you hear kind of part of what he was saying? He was telling some carriers in certain markets to hold their own or start pushing their rates up. And that's really important for us to know, because if carriers start pushing their rates up, of course, our cost is going to increase as well, meaning that we need to push up our bids to our shippers. So I want to kind of start off today looking at drive-in tender rejection rates. I'm going to start with the U.S. map. And this map is showing what is currently going on right now in this market. You see a lot of blue. If you look at our legend down here, of course, as the blues get darker, the tender rejection rates are getting higher. We're going from 0 to 33%. Here in the Midwest, here in the middle, we see a lot of darker blue through our Nebraska, Iowa, South Dakota, Minneapolis, and down into some of the western parts of Illinois. These are areas where tender rejection rates are elevated currently. So these are areas you're going to keep an eye on, and we have some markets down in the south that are picking up as well, through Mississippi, Arkansas, Louisiana, Mobile, Alabama, some over in North Carolina, South Carolina, North Carolina, and up into the Northeast. So these are markets that you do want to kind of go in and check out. And sometimes it could be a little more difficult. So how can we tell really what's been growing on these markets? What markets are increasing? What markets are kind of decreasing? So it's a really good idea sometimes to pull up, and it's the same drive-in tender rejection rate map, but it's a 1 week change. So here the red are markets that are decreasing, and the blues are the markets that are increasing from 1 week prior. And I love looking at this map because it lets me know really what is going on in the markets, what markets are growing, or not necessarily growing, but the rates are increasing, and what markets are decreasing. And you see here, again, through the Southeast, which is normally a very rough period for freight right now, but you see some of the areas are actually increasing in rates. Up in the Northeast, again, we see rates are increasing up there, but of course, you know, the Northeast is notorious for very low contracted rates. Again, Iowa, Western Illinois, and into Missouri and Kansas, we see markets that are increasing in rates, and markets Kansas, California, and some in through Texas are actually declining. So this is a great map to use so you can understand what rates are growing and where. So let's kind of jump over one more time over here to our tree map. I love our tree map here because it lets us know, if I get my tree map here, what are the biggest markets right now. And of course I got brought up here, we got North Platte, Nebraska, Quincy, Illinois, Des Moines, Iowa. I brought those up here on a chart as well because all those are the biggest markets when it comes to drive-in tender rejection rates. We really want to see what is going on the charts as well, to see what direction they've been trending over the last 7 to 10 days. North Platte, Nebraska, while it's a very elevated 33.20% tender rejection rate, it's actually been trending downward. So your carrier cost today might be a little bit lower here in a few days, might be lower on Monday and Tuesday. Markets like Des Moines, and they're kind of increasing right now. And this is what we want to see. This is January. We really don't see markets that are increasing much in January. And of course, I've also circled down here the Medford, Oregon market. It has jumped from below 5% up to almost 12% in a 24-hour period. So it's very important as you locate these markets, as you find these markets on these maps, to jump over and jump into your charts so you can see which direction that these guys are trending, so you know, bid it now, are your rates going to be going up or going down over the next couple of days. Now, one last thing, don't count out the markets in red. Even though they're in red, even though they are declining, that does not mean they're a bad market. Here at Minneapolis, it's still over 14% tender rejection rate. It is trending down, but it's still a very elevated tender rejection rate. This might be a market that you can bid now for a pickup on Monday, and your carrier costs to continue to drop over the weekend, and therefore your price locked in a few days before will help you make a higher margin on these loads. And there's several markets like this. Now, currently right now, a market in red, LAX, 4.92%. It's been very flat, a very tough market right now. The rates aren't moving really up or down, so this might be one of the markets that you want to kind of maybe stay away from.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
I'm John Kingston. Here's your oil report. Donnie may have been talking about some things going up. I'm only going to be talking about things going down. Everything oil is on the way down. So let's start by taking a look at the national wholesale rack average price for diesel. You can see how much it's come down. It's dropped from about $2.07 on January 5th down to about $1.87 today. What's been going on in oil? Basically the same thing I talked about yesterday. The world is very concerned about the coronavirus. The coronavirus, as we know, has resulted in two cities in China basically being shut down. Everybody's thinking back to the days of SARS back in 2003 when jet fuel demand plummeted as a result of the SARS crisis. A lot of people are thinking this is the same thing that's going to happen. The price of oil was significantly affected back in 2003. That's what's happening now. Where it's relevant to diesel, particularly relevant to diesel, is this. Diesel fuel and jet fuel are both distillates, so the markets for the two tend to trend in the same direction. If you get a collapse in the demand for jet fuel because of the coronavirus, that's going to affect the price of jet fuel. That's also going to affect the price of diesel. But there's sort of good news for truck drivers in that you see this price going down, but quite frankly, it's not going down, I think, as much as they would like. This is the retail price. According to the DTS.USA series on Sonar, you see back up here it was around 307, now down 299. That's not even 10 cents. The rack price is down, as I showed you, 10 cents. The commodity price since the start of the year, since I think the day after Christmas, is down 30 cents. So it always takes time for retail to catch up. Sometimes it doesn't catch up. I will say that yesterday diesel outperformed crude fairly significantly. Today, as I came to tape here, what happened is that the oil markets have fallen yet anew, but diesel's falling less. I talked to an analyst yesterday, a friend of mine who I've known for a long time, and he basically said, you know what, the diesel markets have been kicked down so far that I think traders kind of got tired of kicking them. And if you measure the strength of diesel against the Brent crude oil barrel, which is the world benchmark, that spread was about $19 just 2 weeks ago. Now it's down to about 12. It's getting down to low levels it really hasn't been seen in a couple of years. People are starting to think, well, maybe diesel is kind of had its downward run relative to crude. But overall, the oil markets are significantly down, as we've seen. You know, it's really amazing when you think about what's going on in oil. Just in the past 24 hours, or really the past week, Libya, which is a producer of more than 1 million barrels a day, that's effectively shut down because of rebel action. There was what's known as the force majeure, a stoppage of shipments outside of Nigeria. There are some problems in Kazakhstan, which is a pretty big exporter. There are some quality problems in Russia. All of these things should be driving prices higher, and they're having no impact at all. Yesterday, the executive director of the International Energy Agency, a guy named Fatih Birol, said that the world imbalance in 2020 is going to be about 1 million barrels a day of excess supply to demand, and that is really outweighing everything else. Throw into that fears that demand might be even lower because of the coronavirus, and you can see we've got the setup for a significant downturn in price. One thing that's frustrating, I mentioned about retail prices not coming down. This is our fuels.usa spread. It shows the relationship between the retail price nationally and the wholesale price. As you can see, it's getting up to some of the highest levels it's been all years. You had a few spikes here, but then over here, it's right about, again, towards some of the highest levels. That's very frustrating for drivers. They want to capture all those savings, but it takes some time. That's the oil report for today. I'm John Kingston. Thank you.
And that's going to do it for your Thursday edition of FreightWaves Now. The content doesn't stop here. We're always posting on all your favorite social media platforms, so check us out there. Plus, we have our FreightWaves TV app, so check us out on all your favorite streaming platforms as well, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.